Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Andrew Cox, the CEO of Rio2, which trades on the TSX under the symbol RIO. We initiated coverage on Rio2 back in March 2025 and have been quite fortunate enough to watch the company execute over the last year, and it's an exciting year ahead in 2026, which we're going to be talking about in a moment. We currently have a buy rating and target price of $5.50 per share on the company. And again, are excited to have Andrew on here to discuss everything that's coming, talk about 2025 and what Rio2 executed then, as well as dive into a new acquisition, which just closed last week. So Andrew, thanks for being here today.
Yeah, hi Ben. Thanks for having us again. It's nice to be back for a second interview. So yeah,
Mm-hmm.
2025 is a big year for us in many respects. I mean, if we start with Phoenix, was the year of construction. If we flip back to the end of 24, we financed the project in October 24. Construction started, ramp up or mobilisation to construction started pretty much the same month, and so November we were building, constructing, and 14 months time frame, which took us through to December of 25. So basically, effectively, we were able to deliver the project on time, on budget. That 14-month period, we completed the gold plant during December. You probably saw in the gold pour photos and information that was put out that one of the bars was done on the 21st of December. So that was the commissioning of the plant completed in the year of 25, which was our internal objective as a company. And then the official gold pour in January, the 23rd of January, which added another 1,000 ounces or so to the first sale. So
Yeah.
so basically, yeah, a successful construction. We are basically now looking into 2026. What are our plans for 26? There are finishing details on the construction to be done. You know, we tacked the critical path and got the plant producing and uh, finished to an adequate level to produce gold. But there's detail work around the site. There's a internal power line distribution that has to be finished. There's some offices and smoko rooms or mess rooms, if you like, for the plant workers that have to be finished. And parallel to the construction ramping down, sort of January, February, at the same time the operations are ramping up. So we started that ramp up in October last year. October we started to deposit ore onto the leach pad. Obviously we needed ore to leach to have that gold in December. And at the same time, October last year, we also started the water trucking. So I guess if we're looking into 26, what are our challenges? Our challenges are to ramp up the mining to our target rate of 20,000 tonnes per day of ore to leach pad. That will happen. I'd like to think we're probably getting there about October this year, 2026, and then
Mm-hmm.
November, December, we're flat, steady state, 20,000 tonnes a day, which is our design to report for the plant and the operation in the stage one trucked water scenario. Water trucking kicked off in October. That's working well at the moment. We're delivering approximately 1,200 cubic meters per day by truck, and our ponds are full. I mean, the pond up on site has 30,000 cubic meters in it, and at the camp we're filling up another pond with 8,000 cubic meters at the moment. So we're well covered for water. And yeah, during 2026, as the mining ramps up, as the amount of water leach pad increases, that water trucking will ramp up from 1,200 cubic meters per day to about 2,000, which is what we need to achieve the 20,000 tonnes per day. So that's the mining operation. We're drilling, blasting, grade controlling. It's all a little bit hectic at the start because we're on top of a peak. So until we can
Yep.
get a bench established and start taking things down evenly in 10-meter benches, it's a little bit messy. Some of the perimeter blasting, for example, it's not very tidy, but I'm sure you'll see some videos that we'll post on social media shortly showing the first bench being delivered, and then from there on in things start to improve, and we go into a much more routine sort of typical full face mining, and very little stripping. It's just, we're starting on top of the peak right in the zone of high grade mineral, so it's basically high grade mineral to leach pad and some low grade mineral to stockpile.
Right.
Other important activities for 26 drilling. For February next month, we should be kicking off the exploration drilling campaign, and that's targeted at depth, the Fenix at depth. I mean, the resource is currently drilling limited, so the model tops out at the bottom of the pit at the moment because we don't have deeper drilling to work to. So with the gold price right now, as you can imagine, pits are getting deeper and we need more information. So we're targeting that. There's some
Right.
in resource drilling to convert inferred material to indicated, and there's also some perimeter drilling around the edges of the deposit that we have now currently, where we believe there's gaps or holes that we can probably improve on. So that'll happen during the year, and I hope we can publish a new mineral resource estimate probably end of the year, Q4, December maybe.
Okay.
So that'll be interesting, I think, for everyone to see what a new resource looks like with updated gold price. If you recall, the last resource we did was done on a 1650 pit shell for the reserves and 1800 for the
Right.
gold price. So obviously some big changes since then. Other activities, 26 in Fenix. We're obviously working towards the expansion case, and we've a little bit sidetracked by Condestable, the purchase of the copper project in Peru, but we're focusing on that again now. And we still hope to publish the pre-feasibility study of that scenario at the end of Q1, possibly might creep into Q2, depending on the consultants that we're working on with the study. So, but we're still pushing for the end of Q1 at this stage. That's still achievable. I think that'll give everyone a vision or a snapshot of what the potential big project looks like, with some water information, some capex, some opex numbers that are calculated with the help of the suppliers that we're working with towards those two scenarios. So I think that'll be interesting for everyone to see.
Absolutely. And
Yeah.
and maybe Andrew, just before we get into some of those other items, I thought I'd go back. I just want to emphasize something you glanced over, which shouldn't be, is that the project was built on time and on budget. I think that's very rare in pretty much any construction scenario that we've seen over the last number of years. And so I do want to emphasize for listeners that it goes to show that you guys are legitimate mine operators. You've done this before, you'll likely do it again. And, Fenix coming into production essentially last month is a major milestone. And again, it being done on time to immediately be able to take advantage of these metal prices that we're seeing, gold prices and such, is a huge sort of milestone and shouldn't be looked over. And then you've got all of these other things that are coming in the pipeline. And so maybe, there is this acquisition that we're going to talk about in a moment, but on the water, you mentioned it's going to ramp up throughout the year alongside mining. You've already got these ponds that are being filled to have that extra capacity. But in terms of the expansion study, there's that big sort of contingency on the water solution. So maybe you can just touch on the expansion study, how that's going to show the potential of a much larger operation, but then that the water is something that needs to be solved over the next couple of years.
Yeah, sure. I mean, be very clear about it. The phase one for Fenix Gold at 20,000 tonne per day is completely limited by water trucking. That's a bottleneck, and there is no way around that. We can't do more trucks. We possibly could, but I wouldn't want to try. I think what we're aiming to do is where we're comfortable, and going beyond that's not really an option. So we are limited to 20,000 tonne a day. The 80,000 tonne a day expansion case, which I think that's the number, we've looked at, optimization studies, and that seems to be the best fit for the project, would require 100 litres of water per second versus the current 23 that we're working with, or working towards, should I say. So that requires a water pipeline built from probably Copiapo. That's the option, and desal water supplied from the coast by desal providers who today are supplying water to Copiapo for industrial and for domestic users. So yeah, it's a big step forward. I mean, we're looking at an infrastructure project that's, we don't have the numbers. The studies are still coming, but preliminary studies we did back in 22, we're looking at sort of 250 to 300 million. So with inflation and everything, and it's just probably could be up to $400 million. Sorry. There's variables to that. Is it shared with someone? What's the volume of the pipes built for? I mean, how many other users potentially offtake that water and share the capex cost? It's That are things that need to be thought about and decided. But by building that pipeline, that enables us to expand Fenix to 80,000 tonne a day, which is 4 times what we're currently doing, and that allows us to obviously to drop the head grade because our costs come down, and at the same and process. So we're dropping the head grade but processing more tonnes, and we expect to be able to, in that scenario, produce 300,000 ounces for 10 years or more now, depending on the resource that we end up with. So it becomes, the Fenix Stage 2 becomes a world-class, the heap leach operation at 300,000 ounces a year
Yeah.
for 10 or more years. So, I mean, that's the sort of what we're looking to show on paper. Yeah, but it's an exercise, and just, I suppose, to give more colour to that, the timing for that pipeline would be about 2030. It'd be difficult to do it any faster than that. The studies, the decision, the basic engineering, which then feeds into the EIA study, and the EIA study in Chile's 2 years, and then the construction phase is probably 2 years as well. So it's a 5-year sort of project, really, to get to that. And in the meantime, Fenix runs at 20,000 tonnes a day and produces close to 100,000 ounces for those initial 5 years. Well, 1 year of ramp up, at 60 to 70,000 ounces, and then 4 years of 100,000 ounces production.
Yeah. And I guess for the listeners, I've been to site. That brings me back to the on time, on budget. I saw how well the construction operation at least was organized, and the employees and such. And maybe I'm also familiar with the geography of the land, and where the plant is, and where the tailing, or where the leach pad is. Maybe you can touch on how the geography actually works in your favor up in the mountains there, and then with the expansion potential coming over the next four years or so. I understand that you're stockpiling some lower grade ore currently, and the plan there is ultimately that could be processed in a higher gold price environment, probably like today, quite frankly, but with an expanded operation as well.
Yeah, I mean, the Fenix deposit it's a diatreme of an old extinct volcano, and basically it's made up of 3 peaks. So we have Fenix North, Fenix Central, Fenix South, and basically being 3 diatreme complexes that have eroded out preferentially because the rock's harder and they're narrow exposed. The 20,000 tonne a day attacks the cores, so the 3 isolated pits basically centered on each of the peaks. In the case of the expanded scenario, it becomes one big elongated pit, if you like. That's it's over to 4 kilometres long, so it's a whole different scale of mining. Obviously, we go deeper, chasing deeper. The strip ratio doesn't change that remarkably. The initial strip ratio in the Stage 1 project, as it is today, is 0.85 roughly. And in the expanded case, even though we've opened up the pit and gone deeper, it goes to 1.3. So that's effectively the shapes of the mountains. As you're going down, it's not like a flat surface, or even worse, a valley surface, where as you widen out, your strip ratio suddenly dramatically increases. It actually lends itself very well to the strip ratio scenario. So it's a bit of an unusual situation. Yeah, so we're basically just taking the tops off hills at the moment, taking slices off hills, and it's about year 2 or year 3 before we actually invert and start leaving the high wall. In the current operation, phase 1, phase 2 is obviously deeper again before we invert.
And then even haul trucks, for the most part, they're descending with ore, as opposed to ascending in a typical pit.
Thinking about that the day, it's not the typical scenario where we're taking slices off hill and we're hauling loaded downhaul to the leach pad. I mean, it probably lends itself to electric trucks quite nicely if it wasn't for the high altitude and the cold temperatures. You're hauling down loaded and coming back empty, which is the sort of ideal scenario for that. So something we maybe we'll look at if we get time in the next couple of years.
So then, staying on Fenix for a moment, there's a few different milestones that are coming this year. So the expansion study you mentioned, end of Q1, maybe being pushed out into early Q2. That's obviously going to be a major catalyst for investors to see what this operation could be. If the water sort of bottleneck can be solved, and you mentioned 2030, 2031, 2032. That's really not that far off. We're already into 2026 here. And we're talking about a tripling or quadrupling in the size of the operation. And then also with regards to the water, is there any sort of studies or anything like that that investors can look out for in 2026 that you guys are working on?
The PFS study will take the results of the current studies, or one of the results from the current studies which we are completing with providers, and use that information in the study for the PFS. So I mean, there's nothing we can publish now because nothing's finished and everything's still happening.
Right.
But those numbers will be incorporated or pulled into the PFS study.
Yeah. And then lastly on Phoenix, in the fall, you expect to be up to the run rate that's in the current feasibility study. That's you're guiding in sort of Q4 to hit those 20,000 ton per day.
We're hitting 20,000 tons per day to the leach pad around about Q4 October.
Okay, great. And then, so let's dive into this acquisition. In December, you announced the acquisition of an underground copper mine in Peru. Can you talk about the operation as a whole, and then as well as even the acquisition terms? Because in my view, this was a steal considering the potential production and cash flow that it can draw, especially in this copper gold price environment right now.
Yes, so in December we acquired the Condestable mine. It's a historic mine that's been active in Peru for over 60 years. Obviously not at the same throughput as today, but it's ramped up over the years. It's currently processing 8,400 tons per day of it's a copper, gold, silver concentrate basically that being produces about 27,000 tons of copper a year, or 80,000 ounce equivalent of gold sales. So steady operation. We went to look at it. We visited it. It's very close to Lima. We live in Lima, Alex and myself, and it's only a 2.5 hour drive from Lima to see the operation. It's on the coast, so it's comfortable. I mean, you've been to Phoenix,
Mm-hmm. It's amazing.
4,500 meters. This is at 200 meters above sea level, so that was nice. And yeah, we didn't know what to expect, to be honest. We were interested. We heard it was for sale. We visited, and we came away extremely impressed with the operation. We saw an operation that was very efficiently run, very very tidy, well organized, and basically we liked it. I mean, we really liked what we saw, and then the more we looked at it, the reserves, it comes with 10 years of reserves out in front of it that have been proven up and drilled. That the development declines down to the bottom levels, and all the reserves are above that. So there's no big capex spend to go and put in more development and do more exploration to prove up the resources or reserves in front of the operation. The process plant is working well, and at the same time, there's a modification to the EIA in the process, an evaluation process, to expand from the 8,400 to 10,000 tons per day, which we expect will be approved probably August this year. And once that's approved, the operation can then be expanded to 10,000 tons a day. And on top of that, there's a second administrative instance where you can ask for an additional 20%, which would take us to 12,000 tons a day. So, that was extremely interesting to us. The process has begun. The permitting process is well underway and should be determined this year. And so, one of the first things we'll be doing with that operation, that was acquired, process was closed on Friday. That is now getting involved with Condestable, with Southern Peaks, which is the current management company, and looking at how we're going to run this ramp up, if you like, from the 8,400 to 10 to 12. What's required in the plant? What's the best way to attack that? In terms of tailings, they are currently building a dry stack filter plant that should be finished probably end of this quarter, and that's also been built to be upgradable to 12,000 tons a day. So the process is changing from traditional wet tailings to a dry stack operation. So I think that's a pretty good thing these days. And so we want to grab that and get involved with the strategy for the expansion of that project. At the same time, we need to consolidate the two companies together. We need to really go and sit down with them, talk to them, understand who they are and what they're doing, and why they're doing what they're doing, because there's always reasons. And I think we're giving ourselves a 6-month sort of window for that process to happen, and then probably June, July, there'll be a consolidation of the companies, and we'll move forward into the expansion phase of to the 10,000 and then 12,000 tonnes per day. The other thing I think that we are interested in getting involved with is exploration. It's been a privately owned operation, and that the exploration's all been focused on just maintaining reserves out in front of the operation, near mining, drilling. Yep. And they've done no sort of bigger picture stuff outside of the immediate mining reserves. So there's a lot of potential around the project, above the project, in the surface to drill and add resources, which I think that's something we'll be spending a bit of money on this year too, some actual exploration drilling again around the project. So that's something else probably to look out for in the news flow. In terms of news flow with Condestable, we've gone back to update the MRE, the mineral resource estimate. The last one was done in 2022, then published in 24. So we're working with SLR to update those. That report with depletion plus addition with all the resources and reserves that have been added since then. So that'll be hopefully published. I'd like to think that'll come out pretty much similar time frame to the other PFS study of Fenix. So sometime end of Q1, end of Q2, start of Q2, we should be publishing an updated resource for the Condestable project.
Amazing. So there's obviously a lot going on, right? This is going to be the next 6 months or so, a transitional period, getting up to speed with the company, making sure you're not, ruffling any feathers until you really understand the operation, how it works, the flow, and then you can talk about expansion and things like that, and working on those studies in the interim. On the copper, gold, silver, so what sort of percentages for the viewers is copper versus gold in terms of rock value, just so people can get an idea of that?
In terms of income, it's just roughly like an 80% copper, probably 18% gold and a couple of percent silver, just roughly. Depends on the metal prices you use, it changes, but that's about where it is.
And so just on that topic, while we're there, maybe you can talk about the strategy of entering the silver business, if you want to say that. And I think obviously, or not silver business, excuse me, the copper business. Obviously, copper's been doing fantastic alongside gold. Maybe you can just touch on that strategy. It's a diversification. The opportunity presented itself, and we can get into the numbers. It was a pretty fantastic acquisition from a cash perspective. It was pretty cheap in my eyes, and there's lots of upside there. But maybe you can touch on that strategy with the copper.
Yeah, sure, and there probably is safe to say that there wasn't a strategy to actively go into copper. I think we would say it's a very opportunistic purchase. The sale came about, we heard about it, we got involved, we liked it, just for being a well-run cash flowing operation, more so than the fact it was copper. That was secondary. And by very good fortune, this process started in June last year, the negotiations, and when we initially talked to them and made the offer, it was based on a $4.40 copper price at that time. So that was the offer that was put on the table, that was accepted as the basis for the negotiations. So I mean, you say it was cheap, maybe, but at the same time, it was a different copper environment back then. And I guess I should add too, I was saying this, while it is a copper mine, it's not a pivot to copper. From Rio2, our next project will certainly be back to gold and precious metals. And why does it seem so cheap? I mean, the price paid was 217 million roughly. It's 180 million up front, which is made up of cash. It's made up of I think there's $35 million of shares. There is some $80 million in loan from from them as vendor debt. So them as a company loaned us money. I think that's attractive to them as well because they still have interest with the deposit via the loan. The shares,
Yep.
obviously, that they receive from us, they expect to see upside from the transaction, which they did. I mean, it was done at roughly $2.22 and went to $4 before the gold crash. So, they've obviously made money out of that as well, and probably, hopefully, will continue to do so.
Yep.
That $35 million shares they have is restricted. There's a 9-month hold period, and they can't sell without talking to us. So, just in case anyone's worried about that. And the other component was the cash component, which we achieved via the capital raise we did back in December last year. So 217, 180 up front, and 37, which are basically staged calendar payments based on calendar dates. There's a 10 million, a 5 million, a 15 million over the next 3 years that we pay at the end of each year. So and I think we like their project. I think they liked us. They saw us as a logical fit because we are in Lima. Our technical office is in Lima. All our technical staff are Peruvians. And we've operated in Peru before with 2 mines. We understand the social, we understand the environmental, we understand permitting, and we're a Canadian listed junior going to producer, but we're still very much a Peruvian company in a lot of respects. So I think they were very comfortable with who we were, and them being a good fit for their staff to come and work for us as well. So I think that was a part of the attraction to them as well.
Yeah. Yeah. So very opportunistic, and again, it's
and of course, like you said, copper price went crazy during that the last 2 or 3 months of that process. I don't think anyone could have foreseen that happening, to be honest.
Yeah. Well, and even gold with Fenix, right, over the construction period. Yeah. Well, no, that's fantastic. Congratulations, and that closing on Friday is super exciting. I think, it paints a great picture for the growth story between today and 2029, 2030, when all of a sudden Fenix and the expansion potential could be coming online.
And I think what you've just said is that's there's organic growth stories in Fenix towards the 80,000 tonne a day by 2030, and also at Condestable, we're going to go from 8.4 to 10 to 12 during this next 2 or 3 year gap, and then is there a potential open pit on top of that? That's something we have to go and do more work in drilling, but yeah, I mean, it's not going to be static. Nothing's going to be static. We continue to work towards expanding both these operations and doing the best we can with them.
Yeah. No, it makes sense. And so just to close out on Condestable, June, July is sort of the time that you're going to have the companies fully integrated and sort of position and stance on what is coming going forward. You're also working on the expansion, 2 potential expansions within that operation, bigger picture sort of exploration as well, which could even lead into a larger expansion down the line. And then concurrently right now, you're looking to update the resource, which will be a catalyst within the next few months.
Correct. Yep, that pretty much sums it up for what's in the pipeline for this year.
Yeah. No, well, that's great, Andrew, and I guess maybe to close out more holistically on the business, right? You've, with this acquisition, shown that the team can take advantage of opportunities as they present themselves. You've got strong access to capital to be able to execute on acquisitions like this. And then, of course, working with projects that have that expansion potential for internal growth initiatives. But maybe you can touch on the team's experience, yourself and Alex, and where that experience comes from.
Okay, so if we step back to 2010, roughly, the Rio Alto was the previous company pre-Rio2. That's where Rio2 comes from. It's the continuation of Rio Alto. And there was a company Alex created and formed back in probably 2009, I think. And then that company acquired La Arena project in Peru. La Arena was a open pit heap leach operation, oxide heap leach gold in La Libertad, and Rio2 put that into construction and then operation, and basically in a 1.5 year time frame, similar to Fenix. And in the second year of operation, it was producing 200,000 ounces a year and continued to do so for 2012, 13, 14, 15, 16, 17. And continues to produce today as an oxide mine. It's on a decline, but the gold price is keeping it alive. And then in 2015 with Rio2, we built Shawinda, which was the project we acquired from Sullivan in 2014. So during 2015 we built that. That was like a 1 year construction, and started producing in 2016. And then that's the end of 2015. The company was bought by Tucker Resources, and basically the management team ended up without jobs. So that's a proven experience. We've built and operated 2 gold mines here, and Alex basically tried to keep most of the team together. And then when he formed Rio2, that was the nucleus, I guess, of the management team. Everyone who's in this office, 95% of us, have come from that experience. We were all involved in the construction and operation, probably more at an operational level, but now the people are into the management roles. And I think when you say Fenix on time, on budget, I would have been disappointed if we hadn't have done that. The group of people we've got who've done it twice. We're working with our 2 preferred contractors, HLC and Stracon, who built those 2 other projects with us. So we shouldn't have had many surprises. It would have been disappointing if we had got that wrong after the 3rd opportunity. So happy that it worked out, but I wouldn't have expected much less, to be honest. So.
Mm-hmm. No, that's great though, and it gives investors confidence seeing the success at Rio Alto. You've already had great success with Rio2, and quite frankly, you're just getting started, right? Cash flows are going to start rolling in from both operations in the relatively near term, and then you've got all this expansion potential. Maybe you'll continue to be acquisitive.
And that was a big part of the traction of Condestable. It bolts on cash flow. It doesn't require a lot of our management time because it's got a management team. The operation is working very well. We see it more as a strategy input from ourselves, like the exploration, drilling, the expansion, construction. I think we can get involved with that and bring a lot of value to the company. And at the same time, we've got a team of people in Chile now coming out of construction. We've got the Rio2 office coming out of construction, and we don't really have a construction at this stage in Condestable. So we've got a group of people who are looking for something to do. So, maybe some of that cash flow gets turned towards M&A. I think.
Yep.
With Alex, I think we could do one more gold project. So if what happens in 2026, like we say, Condestable shouldn't take a lot of our time and resources. It's a bolt-on working operation that's working well. We don't. It's not going to be a big part of what we're doing. And so I think with the Fenix settling down into production and operation, we've probably got the capacity now to start looking at something additional.
Yeah, great. Well, no, that's fantastic to hear, and I think there's obviously a lot going on, a lot that investors can look towards in 2026 as you get into this producer sort of period of the company. But again, you're mine builders, and that capacity comes back online, and it's why not bolt on another. So it will be exciting to see if you are able to find another opportunity to continue those internal expansion projects as well as potential M&A, as you just mentioned. So with that, Andrew, appreciate the time. Thank you for walking us through that and filling us in on what you guys were successful in achieving in 2025 and then what's coming in 2026. Certainly lots of catalysts to come over the next 6-12 months. For our viewers, if you haven't seen our research on Rio2, you can find that all on our website at atriumresearch.ca. And we will be synthesizing the news that Andrew and Rio report over the years. So continue to follow along there. And again, Andrew, appreciate the time today.
Pleasure.
Great.
Thanks, Ben.